Should you be using limit orders or stop orders? That is exactly what we will be speaking about in this video. So which one of these two types of orders you have to be using in your trading to improve your performance. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis each and every day. So I suggest that you subscribe to the channel and I will see you in the video, and make sure you watch it until the end because it will be filled with value. Okay, so to explain when it is best to use a buy limit or sell limit and when it's best to use a buy stop or sell stop, we will be taking the example of the trade that we executed last week with students on EURCHF, and I will be explaining why we use limit orders most of the times and why they are most effective. Now, in explaining this, let's first give the multi-timeframe analysis on EURCHF, so you will also understand why we were looking for potential buys on EURCHF, and you can be using the same concepts also in your own trading. Then we'll go down to the entry part, and I will be explaining why limit orders are way more effective than stop orders, except for some very specific cases that as well I will be explaining about in this video. So let's start from the multi-timeframe analysis. Now, what did we have from a weekly perspective on EURCHF? And by the way, I will also explain you how we can be looking for the next capitalizing opportunity on EURCHF. So let's make the full analysis. Here from a weekly perspective on EURCHF, we have this overextended M formation. Now, after an overextended M formation, what do you want to see? You want to see the market make a move to the upside. And in fact, I had made a multi-timeframe analysis on TradingView telling to all of you, after this move, expect the next wave to the upside. And also specifically from a daily perspective, what did I say? I said, after the market had created this impulse, expect a minor correction and continuation to the upside. And with students, we will be looking for potential buys from here, which is exactly what we did. And I will now show you why. And by the way, guys, I will link that analysis in the description of this video if you want to go and rewatch it. Now, continuing with our full analysis. From a weekly perspective, we have an overextended M formation, and we wanted to see the market make this move to the upside. Specifically, we still want to see the market go higher to test this structure here, the previous support, which is now turned resistance and which is also the completion zone of an overextended M formation. Because if you have an overextended M formation in the market, you want to see the market make a move to the upside to the previous support, now turned resistance. Okay, this is the completion zone, which in this case is here. So you want to see the market go and make a move to the upside. So immediately from a weekly perspective, we have a bullish view in mind for EURCHF. Going down on the daily time frame, we all know that the market was showing a clear deceleration in creating these lower lows, and it was just a matter of time before banks would start to push the price of EURCHF higher. And in fact, after this impulse to the upside, I made that analysis telling to all of you, expect a pullback, and then we are definitely looking for potential buys. Specifically, I said, expect a pullback to this area here. Why? Because it was previous support, now turn resistance, again resistance here. Here there was a fake breakout to the upside, but then again, the market broke it to the upside. And I said, expect a retracement to this area, and then we can definitely be looking for potential buys. And that is what we will be doing with students. You can go and rewatch that analysis, it's in the description. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, what we had from a COT perspective. So commitment of traders, what hedge funds are doing in the market. Now, if you don't know what the commitment of traders is basically the positioning of the biggest speculators in the market. We follow their orders because obviously they're winning most of the times. So if you're able to understand how to read these order flow tables, so they are forced to report their positions. And if you're able to read the way in which they're positioned in the market, you're able to gain an edge over your competitors in the market. So from a euro point of view, what did we have? We had net positions that went from minus 114k all the way up to 72k. This is the new report. So from minus 114k all the way up to plus 72k. What does this mean? It means that hedge funds went from having more shorts than longs to having more longs than shorts on the euro, meaning that they're very bullish on it. In fact, they had 167k longs and 95k short positions, so way more longs than shorts. You definitely expect the euro to get stronger. And if we go and see what they had from a CHF perspective, it is true, CHF was getting stronger as well, but not as strong as the euro. In fact, what we could also see is that there wasn't some proper longing from a CHF perspective. A lot of shorts getting closed, but not many longs getting added. So we could definitely expect Euro CHF to make the move to the upside, fueled by the euro strength. So everything indicating for a move to the upside, specifically inside of this area. This is where we were looking for a potential buy with students, as you know, also from the previous analysis that I had published on TradingView if you're following me. And you will find the link in description. Now let's speak about the entry. How did we execute the entry with students on this one? Was it a buy limit or was it a buy stop? Now in this case, if you just see, okay, this was our risk to reward, our stop loss protected by structure, take profit where? Take profit at the minus 27 of the Fibonacci taken on the retracement, which is the first resistance level that you expect the market to hit. And in fact, when the market hit our take profit, it immediately rejected our take profit. We're already out of the trade with this huge move to the downside. You always want to be taking your profits at the minus 27 because many times you will see a strong reaction at the area before the market continues to the upside. So it's best to take your profits, specifically if you already have banked a 1, 2, 3 risk to reward on the trade. So we closed the trade here, but how did we execute it? Now, my complete set of entry rules obviously is part of the mentorship program and I can't share it. But what I can share is why, in this case, using a buy limit is way more accurate than using a buy stop. And in this kind of situations, I always suggest all of you to use buy limits. Now, if you have a market that is still below this structure, let me zoom in, okay? The market here is still below the structure. You might say, okay, you just place a buy stop here, and when the market will go and trigger that buy stop, the market can easily go to the upside. Wrong. Why? Because when the market will reach this area, this was resistance here, and it will be again resistance at this area. So the market can go up, trigger your buy stop, and then immediately reverse to the downside and take you out of the trade, meaning that you bought from resistance, which is something that many people I see them doing when they use buy stops. They just place their buy stop at the high, meaning, okay, if the market will go to the high, then the market might just break through the zone. Wrong, because if you're buying from there, you're buying from resistance, which is very risky. So always wait for the break, and that is exactly what we did with students. After the break of the structure, and specifically the close above it here with the green candle, that is when you can be looking for potential buys from the area. Why? Because at that point, the previous resistance is now turned support. So you can place a buy limit at the area. Now, is looking at structure enough just to execute trades? No. That is why we have a long set of rules that need to be satisfied in order for us to be looking for this long, not only from a directional perspective, which I already explained, but also from an entry perspective. Here on the 4 hours, we have more rules that need to be satisfied in order for us to take the trade. The entry rules are not based only on structure, but structure definitely is an important thing to monitor, a simple basic price action thing that you need to know. Okay, structure, you need to know it. Previous resistance, if it breaks to the upside, is turned support, and most of the times the market will go and retest that structure, and there is where you can be placing your buy limits. Same thing for a short position. If you are monitoring price action for a potential short, you see the structure break to the downside. So previous support here, the market breaks it to the downside. If the market will go and retest the structure, there is where you're supposed to be taking the sell with a sell limit, because that is where you will get the best probabilities and best risk to reward. You will be able to protect your stop loss. And people that are just placing the buy stop here, they're not really doing anything smart, because they are basically selling the support. So the market here, when the market continues to the downside, okay, when the market after it goes to test the zone, okay, the market goes to test the zone, retracement starts the next move to the downside, people that are just placing their sell stop here, most of the times will get just stopped out because they sold at support, which is something that you're not supposed to be doing. Wait for the break, wait for the support to become resistance, and then use a sell limit, not a sell stop. But I want to show to you guys only one situation in which you're actually supposed to be using a buy stop or a sell stop. Now, 95% of our trading is all on limit orders. That is why we don't need to be following the market every hour. Okay, we just have to check the charts every 4 hours to see if our rules are satisfied, place our pending orders, and the market, our broker will do the rest. Okay, our strategies can be easily traded with a full-time job because you only have to check the charts every 4 hours. But there's one specific situation in which you definitely want to use a buy stop or a sell stop. If the market has already satisfied basically all the structure requirements, so previous support, now to resistance has already been tested, but you still couldn't enter because your rules are not satisfied. Okay, that happens, not very often, but sometimes it happens to us. If our rules are still not satisfied, I don't know what your rules are. For example, I have very strong wick. Okay, I'm just making up. For example, you need to see a very strong wick, and the market still hasn't provided it to you. And the market starts the next move to the downside, and then it starts a move to the upside. At that point, while the market is making the move to the upside, there is where you can say, okay, I don't want to use a sell limit, but if the market will go back down, my rules are immediately satisfied. At that point, there is where you want to be using a sell stop, because if the market will go back down, your trade will be immediately triggered, your stop loss will be well placed, and that is where you can be using a sell stop because all your rules are already satisfied and you are selling not at support but at already created resistance. This area is already resistance. That is where you can be actually using a sell stop, and the same exact concepts apply also to a buy stop. Okay, if everything is satisfied for long already and you're just waiting for one last condition, then if the support is already there, you can just place the buy stop. It's absolutely no problem. But don't use buy stops at resistance because the market can easily just touch your order, put you in the trade, and then go and stop you out, which is not something that you want to see the market do. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, and I will see you in.